Hello traders, and welcome to another educational video titled The Frypan Bottom. The Frypan Bottom is a bullish reversal pattern identified at the end of a decline, at the end of a downtrend. It's very similar to the Western reversal pattern known as rounding bottom. The Frypan is identified at the end of a downtrend and signals in an upward movement, a reversal to the upside if you wish. It's not common at all, but when it appears at the end of a decline, at the end of a downtrend, then we should be alerted and be prepared to enter the market to the upside. Good. Regarding the specs, it consists of a number of small bodies of either color. The fact that it has a number of small bodies, it implies that the volatility of the market tightens up. The volatility reduces. That's why we witness the small bodies. This is what it means. Small bodies means low volatility. Now, the Frypan bottom reversal pattern, it can be identified, it can be categorized, it can be characterized by different phases. One phase is the downward phase where we can see lower lows. The small bodies form lower lows. Then in the middle of the Frypan, we might see equal bottoms or almost equal bottoms. And then in the second half of the Frypan, we can see rising lows, higher lows. Yes. And then a rising window, a gap, and then breakout above the gap where it signals the end of the decline and the beginning of a new trend in the opposite direction. And of course, this implies bullish implications. Very good. Excellent. Something to notice here is that the color of these small bodies is not important at all. But of course, after the gap, it's important to see a white candlestick to signal the momentum, to signal the power of the bulls that took over the market. Very good. So let's take a look at the Frypan on a real chart, and this is exactly how it looks. In a downtrend market, then we can see the lower lows on the left part of the pattern, and then about more or less equal lows, and then rising lows, higher lows on the second half on the right side of the pattern, and of course a rising window, as we call it in Japanese candlesticks terminology, or a gap up, and of course after the gap a white candlestick that signals the power of the buyers, the power of the bulls. Good. A basic strategy regarding the Frypan reversal pattern. Now, we can see here, we can identify it on the chart, the Frypan, the rounding bottom, as we call it in the Western terminology, and of course the gap up and a white candlestick above the rising window. Now, we're going to place a buy order right above the high price of the white candlestick, a protective stop loss right below the gap, because the gaps in general act as support and resistance areas, support and resistance zones if you prefer, and in this case it will act as a support area. So that's why we're going to place our protective stop loss right below the rising gap, just in case. You never know what is going to happen next, and if the market goes in the opposite direction as expected, then we need to protect our capital. Now, regarding the take profit strategy, we're going to use the height of the Frypan. So we're going to project it right above the high price of the white candlestick that gaps higher than the window. And here is the first take profit level. We're going to close part of our trade at the first take profit level, and then we extend it one more time, 2 times the height of the pattern, and here is going to be the second take profit level, and then we're going to extend it once again, meaning 3 times the height of the Frypan pattern, and here is going to be our last take profit level, right? So, of course, if you wish to allow a small part of your trade to run even higher, so feel free to do that. But again, be reminded that when you identify any reversal in the opposite direction, then you have to exit your trade. Now, let's modify this strategy, or maybe let's see another strategy regarding the Frypan reversal pattern. So once again, after we identify the reversal pattern, the Frypan, then we enter the market with a buy order right above the white candlestick. And as always, we place a protective stop loss right below the support. So we protect our capital just in case the market goes in the opposite direction. Regarding the take profit strategy, now we're going to simplify it, and we're going to close part of our trade at 1 time the height of the pattern, and then we will allow the remaining of our trade to run higher, take advantage of the momentum, take advantage of the rally. But in any case, when we identify any reversal pattern in the opposite direction, we're going to close the remaining of our trade, the remaining of our position. Guys, I hope you enjoyed it. Don't forget to subscribe below, like, comment anytime you wish. Now, one final strategy involving the Frypan reversal pattern. Now, here we are, and we're placing once again a buy order right above the high price of the white candlestick, and a protective stop loss right below the support area. Here I use a moving average. I use a 20 period moving average. You can choose the method that you prefer. For example, it might be simple, exponential, linear weighted, or whatever you prefer. Of course, we will have a dedicated video or videos regarding the moving averages. For now, let's call it just a moving average. So we use a moving average of 20 periods. It might be any other periodicity that you prefer, like 40, 50, 60. But nevertheless, we're going to buy right above the high price of the white candlestick, and we will allow the market to move higher to take advantage of the upward momentum, because prices move above the moving average. So when prices move above the moving average, it implies that we are moving upward. The market is moving upward. But when we witness a close below the moving average, or 2 closes, or 1 black candlestick below, or 2 black candlesticks, this is up to you. Then we're going to exit the market. We're going to close the whole trade, the whole position. And in our case, what I'm doing here, we're going to exit. We're going to book our profits, if any profits at all. In this case, yes, we do have profits, small, but we do have profits, and we're going to close the whole of the trade when we see 2 closes below the 20 period moving average. Thank you for your attention, guys, and don't forget to subscribe below, like, and comment. See you in a while with another exciting educational video.